Hello guys, in this video I will try to show you why does the market crash. Okay, if you look at the history of the market, you find let's say one day the market lost 10%, 20% until 50% of all the money of the market, okay, in one day. And you ask yourself, why is that? Now, what I would ask you to do is go online, read books, ask the people who are guru in trading or investing, and ask them why. You know, you find that no one has no clue why this happened. And people who are in the economy, you know, because they have no facts. The only thing they have is they see the market crash. But who made this crash? No one knows. Okay? No one knows. And this thing happens each 10 years, 20 years, 30 years. And the market is going up, going up, but one day something happened. Let's say, for example, what did happen in 1987? Okay, it's called Black Friday or Black Thursday. They just give it a name. The stock market is trading normally, and then about 1 o'clock, 2 o'clock, lunchtime, and the market will begin to go so fast down. Now, for me as a trader, so I don't invest, okay? Because I trade with my account, so I can't take a lot of money and put them aside and put no stop loss to them, and then I'll just leave it go up or go down, go up. But if this day comes, okay, what will happen to your account? Okay, so let's just give you an example. What happened in 1929 when the market lost 50% of its money? Okay, some industries they lost 85, 90%, depending on the industries. Now, here is the thing. When there is a market crash, it means there is a big sell-off. Okay, a big sell-off. What does it mean? It means big hands in the market, big guys. They just in one day sell. You ask yourself, why these guys who are so big in the market? But we don't know them, okay? Because no one will point the because okay, they sell. But why it is on the same day? This is what I am asking you to think about. Okay, this is just a question. I'm not asking you to find like reasons to find who, because you know it's a hidden secret. Until now, all what you see in the history of like a stock market, everything is hidden. Hidden from what? From whom? From the public. The public, it means I and you and anyone else who has no big hand in the market. You find yourself sometimes clueless. You say, what did happen? How can the whole market loses 50% of its money in one day? How that comes? You know when I tell the whole market, what does it mean, the whole market? The whole market, it could be trillions of dollars, not billions of dollars. I'm not speaking about billions of dollars here. I'm speaking about trillions, okay? Thousands and thousands of billions of dollars will be lost in few hours, not just in one day. They say Black Friday or Black Thursday, but it will be lost in few hours. Now, how come these guys, they sell on the same time? Okay, this is a clue. This is just a hint I give you to in order to think in the future. Okay, why? People are looking about, you say in America or in the whole market. It's not just in America. It happened in other countries, in Europe, in Hong Kong, and sometimes when there is a crash in one market, the other markets follow, because these guys are working. You think that they are like working together, and when the market, these guys buys like 10 years, 20 years, 30 years before, and they have too much money in the market, and they push the market to go up, push. They push everywhere with advertisement, with TV shows, with whatever. They have the money to do this, and they push the market up and up. And when it is ripe, all together they come in one day and they reap the market. It means they harvest the market. It means if it is trillions of dollars, and they reap the market, they take 10%, 20% in one day. This is too much money. Now, ask yourself, where the money goes? It should go somewhere else. Like what did happen in 2008. I have explained this in other video. What happened in 2008, where the market crashed in the whole year, and you see that almost all the stocks, they lost 10%, 20, 30, 50, depends on the stocks, the whole market. Now, where the money goes? It goes to gold and silver, precious metals. And you see people who were buying silver and gold and the other stuff, it goes so high in these years. And other time they say, oh, invest in gold and silver, invest in gold. But after a few years, after those guys have bought all the companies, all the gold and silver, they bought it when they were cheap. You know, gold, it was $300 an ounce. But after 1 year, 2 years, 3 years, it goes to 1848 in April 2011. Okay? So this is how the shift of money. People, the big guys, when they take money from a market, okay, from the stock market like stocks, they try to put this money elsewhere. Now, when they put this money elsewhere, it becomes bigger and bigger and bigger, and there is a bull, like the bull in silver and in gold. Now, you remark, if you notice this price change, you see in 2011, the price of gold and silver at the end of the year begin to sink. Right now, you can see what happened to silver. Silver was $48 an ounce. Now, I didn't check these days, but it was just last week or the other week, it was 15. Do you know what does it mean? If you buy on 2011, you buy silver with 48 an ounce, and they told you that the silver will go up and up and up, and it is something for your future. Buy something that it is solid, something that it is physical, and they play with you. And you go and you buy either coins, or you buy stocks, you buy wherever. But from 2011 to now, you see that the gold and silver metals go down. Now why? Because the big guys, they take their money from precious metals and they put it in the stock market again. That's why you see that from 2011 to now, there is a bull in the market. Okay? But what did, if you check the price in 2008, what did happen? All the people sold the stock market. It means they sell the common stocks, industries, and they go to some industries that are like gold, precious metals, and stuff. That's why they go up. You see that there is always a shift of money. These big guys, they waited too long. They waited many years or decades, and they rip off the market. Now, neither government, neither the economists, they say to themselves they are economists, they are researchers, but what they give to us, They give to the people, or to the common people, when you read, they give what you call theories. Oh, it's because the world economy changes. It's because oil has gone down. It's because there is a war in that country. No. Everything that they say, I'm not saying there is a lie, but they don't know. Now, for me, how do I know? For me, I know only the price. And you see the price, the shift of money, how they change from industries to other industries, from sectors to sectors. This, if you can see, you will see that the change of the money is something real. Now, for me, I don't know who are these guys, and I am not looking for who is who. Okay, so it's not because it's the market. No one knows who is buying. No one knows who is selling, and you waste your time if you want to know, because economists with the power of research, with thousands of books, thousands of data of the stock market, but they will never know. Why? Because these people, when they do something, it's the other side. For example, for you, when you see the bid and the ask, okay, you don't see the other side, what did happen. You will never know. Okay, so, and this is not, I'm not saying it's a problem, but you should understand that anything happen in the market, there is someone who is behind, someone or many people. Now, for me, the funny thing is that you ask yourself, why the market crashes in the same day? This is the question. Okay? It's because those people, they manage to play together. Okay? If they want to reap the market, there should be a date set by some people who have too much money in the market. Okay? And then when they see it's a big profit, like 10 years, 20 years, 30 years profit. Okay? It's not 1 year or two. Okay? Sometimes it is like 3 years, 4 years, 5 years, like what it happened 2008, 2011, and from 2011 2014 right now. You see the shift of money, how it goes from the common stock market, it goes to precious metals in 2008. And 2008, the market begins to be good for precious metals like gold and silver and gold, they go so high. Okay? And then from 2011, you will see that silver and gold, they go down. I have gone to a lot of channels where the people, they advocate and they say, oh, buy gold, buy silver, and I argue with them that the stock, that from 2011 gold and silver is going down. Now these people, when they want to sell, they ask you to buy. Okay? And they say it's an opportunity to buy right now. Now when you are buying, they are selling. These are for those who want time to sell their stuff. Okay, they don't want the price to go down so quick. Just 1 minute. So you understand that these days. Now, why I make this video? I make this video if you have a big investment in the stock market. Okay, let's say you invested for 10 years, 20 years, or 30 years in stock market, and you have accumulated a profit. Let's say you bought some stocks or some companies, and you know these companies, and the companies, they go good, and then in one day you will lose 10%, 20%, 30% of your money. Okay? It means that this 10 years, 20 years, 30 years that you have invested and you are successful, they can take your money at any time. And this is a big problem for those who have their money as a retirement in the stock market. Okay? And you see all online. Invest in the stocks. Invest in the stocks. Okay, you can invest, but be careful. There is one day that if it comes, they will reap all the profits from the market, and all the people will be clueless, because there is another action that I want to speak right now about when there is a big sell-off in this one day, what will happen in the morning or the afternoon? The floor traders, okay, the floor traders, when they see a big sell-off, they see a lot of orders coming. So because these guys have big orders, they have millions of shares to sell in minutes. So what the floor trader do? They help because they short the stock. If someone big is selling, the short sellers are there, okay, because they are always in the market, okay. They don't invest. When you ask yourself, why these big guys in floor, which they call them floor traders, like in the New York Exchange or in Chicago exchanges. Right now it's almost like electronic thing, but still we have people there, and they are like trading. Why do they day trade? They don't invest. Ask yourself question. Because they see the market, they don't care what happened at night or what happened. What happened in the day, they do their job. If they see the market is pushing up, a lot of orders coming, they push up also. By the end of the day, they sell. Okay, this is what the day traders do. Now, when it is a big sell-off in any stock or in the market, what they do? They short the market and they help the big sellers, but they don't help them because they take some of their profits. Because those guys who are selling, they want a higher price, but because they sell too much, the price will depreciate and it will decrease and go down very, very, very quick. In order that the market, for example, if the market lost 1% or 2%, it's too much in one day. But suppose that you have invested for the long run and you lose 20%, 30%, or 50%, as what did happen in 1929. What will you do? Okay, so just these ideas that I am proposing to you is just to ask you to think always that the market is always risky. Don't think that the market, when the stock is going up, it will never go down, and maybe it will take your profit, and it will take your money, and it will take your time. Because when you invest for the long run, 10 years, 20 years, 30 years, sometimes they take too much of the market. Now, this idea of why the market crashes, for me, it is a lot of people who have a lot of money in the market. They want to take their money in precise time. That's why they do it at the same time. How come 20% or 30%, or what did happen in 1929, 50% of the market is lost? Now who takes this money? Okay, as a profit and as either trading or investing. Who took this money? Now the government knows, because they do investigation. They know who is. But as I told you before, these things, you know, the market is full of wealthy people and politicians. It means it is something related to politics and something related to the wealthy people, either in America here or everywhere in the world, because it doesn't happen only in America. When we have a crisis here in America, we have other crises in Europe, and in especially when we have a crash in the market. Okay, sometimes the crash in the market begins elsewhere and comes here, because these people owns stocks in the other stock market, also in England, like London, or in Paris, or in Hong Kong, or in Japan, everywhere in the world. Okay, so these people, I didn't say they control the world. Yes, because you will see that these things happen in one day, in few hours. How come the whole market lost 20%, 30%, or 50% in one day from the whole market? This is a big question that you should think of, especially when you have too much money in the market and you are thinking that the market is stable. and it goes up, it goes up, it goes up, it goes up. Then one day, all the people lost their money, and when they lose their money, it means their retirement. It will be a catastrophe for all these people who waited 10 years, 20 years, 30 years for it. That's why if you see these people who are investing for the long run, they ask you, oh, don't take your money, the market will go up, even it go down, it go up, it go. But who tells you that you live until the market will go up? Okay, someone who has too much money in the market, and then we have a big sell-off, and he can lose everything that he has. Now, in order to that the stock market go up, it needs years or decades in order to go up again, because those people who sell off right now, they leave the market until it go down, and then after a few years they will change their mind and they will invest, because the stocks at that time, or the big companies, their shares are so cheap, so they buy them again, and you see a big move with advertisement, with TV shows, buy, invest now, the market is down, invest. You know, it's a big game. And this game of money is one of the biggest in the world, okay? So it's trillions of dollars that it is in the market. It's not when you say billions or millions of dollars that you think about. It's all people who put their put their money in the market. Okay, so this is just my idea about the market. Hope if you have other ideas, or if you have read books about these theories on how or why or who is behind this crashes, it means in the market, please comment, thumb it up, or subscribe, and thank you very much.